This is Barrie, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this market and economic update. In this video, we'll discuss October's market performance and some of the key events that shaped the month. Now, despite headlines about a government shutdown and renewed trade tensions with China, the stock market continued its strong performance in October. Many major indices reached new all-time highs after recovering from brief periods of volatility. Bonds also contributed positively to portfolios as interest rates declined. Over the next few minutes, we'll discuss what drove this performance and some of the challenges that investors may continue to face as we approach the end of the year. First, this chart shows that the stock market reached 36 new all-time highs this year as of the end of October. This occurred even though October began with a government shutdown that is now approaching the longest on record. While shutdowns create real hardships for federal workers and interrupt government services, it's important to maintain perspective around their impact on financial markets. Historically, those impacts have been minimal. The longest shutdown in history lasted 35 days during 2018 to 2019. Yet the S&P 500 went on to gain 31.5% in 2019. While there's no guarantee this will happen again, it does show that markets can look past these events. In October, the market also experienced its sharpest one-day decline since April, driven by escalating tensions between the U.S. and China. This was due to a dispute over rare earth metals and the threat of 100% tariffs on Chinese goods. China controls approximately 70% of global rare earth production and nearly 90% of processing capacity. Since rare earth metals are necessary for many high-tech devices and military systems, this gives China considerable leverage in trade discussions. Despite the brief sell-off, markets quickly recovered following softer language from the White House. Leaders from the U.S. and China met near the end of the month, which resulted in a de-escalation and a 10% decline in the tariffs imposed on China. Finally, the Social Security Administration announced a 2.8% cost of living adjustment for 2026. For the average beneficiary, this represents an increase of only $56 per month. While any increase helps, this modest adjustment may not keep pace with the inflation that retirees actually experience. However, this is not new. Healthcare costs, housing expenses, and other categories that weigh heavily in retiree budgets have risen faster than overall inflation index for a number of years. This is even more challenging with the Fed cutting rates for the second consecutive time in October, because this means the interest rate on cash will likely fall further, making it more challenging to generate income. This underscores the importance of comprehensive financial planning as well as a truly diversified investment portfolio that does not rely solely on just stocks or bonds to generate either income or growth. The need to adapt to changing market conditions is ever evident. Now, I hope you found these high-level insights helpful. If you are a financial advisor and would like more information on our multidimensional approach towards asset management, feel free to download our white paper. You can click the link below or visit our website at dynamicwg.com or email us at info@dynamicwg.com. Now, if you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, take care, everyone, and make smart, logical, and fact-based financial decisions.